with all the value that is inside this Discord. All right. So if you're new here, welcome. It's such a blessing to have you on board. I'm sure that any other CYPRX OGs will tell you guys the same exact thing. All right. So starting off, all right, in today's call, we're just going to go over the fundamental backdrop since it's our first call of the year. We have a lot to cover. This report was very lengthy. It took me about an hour to write this rising. So we'll go over this in detail. It'll discuss thoroughly for you guys the market landscape as we ended the year in 2025. So that way our mindsets are all right and in the same place as to what happened in the market sentiment as we roll over into this new year, so to speak. And then it'll cover in detail what we need to be mindful of, paying attention towards in the coming days ahead, particularly our focus this week. What's on the backdrop for the fundamental landscape in the days to come, Monday through Friday, where our focus needs to be, and what possible scenarios could unfold depending on the sentiment from the labor data and some other catalysts to be mindful of and watchful of this week ahead. All right. So once we're done that, I'll kind of just reflect. I'll ask you guys some questions. We'll type out a list. We'll go over some bullish and bearish scenarios. I'll break down some TA, primarily the crypto market cap, what I'm looking at for a possible recovery that would solidify a possible move to the upside, taking a look at some numbers in the total market cap. And then we'll also break down Canton's technical analysis, some levels that I'm being mindful of, that sell delta held pattern that I was paying attention to that might be in the process of playing out if these lows here break, for some further dollar cost average levels down at these lower deltas. And then obviously, of course, we'll keep pace and up to date with our XRP TA for now. All right. Heading into, I'd say probably after January, we'll start to throw on maybe like another pair where we have order flow access to these pairs, like HBAR. I think we have order flow on. We have Solana, XLM, Bitcoin, Ethereum. So maybe we'll start to take a look at some other pairs. For now, we're just going to focus our attention on the primaries, XRP, and it seems like a lot of other people also have their attention focused, oriented on Canton in this community as well. All right. All right, so let's break this down. Let's thoroughly read and let's lock in. So make sure you guys are paying attention when I'm reading this, because when we go over the total cryptocurrency market cap scenarios, I'm going to ask you guys questions to make sure you all were paying attention. All right. All right. So looking back at 2025 and especially the month of December, the market environment was defined by a series of risk-off catalysts that constantly pressured risk assets while supporting demand for safe havens. We saw gold soar, we saw silver hit new all-time highs, so on and so forth. Crypto was no exception. A more hawkish-leaning Federal Reserve shifted firmly into a wait-and-see mode, pushing back expectations for imminent rate cuts in 2026 unless data becomes meaningfully more supportive. That shift alone was enough to cool sentiment across risk markets, particularly crypto. You guys can see some of the headlines and the fundamental screenshots that I deliver for you guys. Layered on top of that were persistent geopolitical tensions spanning Russia, Ukraine, China, Taiwan, the Middle East, and now Venezuela. These unresolved conflicts kept headline risk elevated and reinforced caution among investors as the year closed. Trading volumes were notably thin into the end of 2025, with the total cryptocurrency market cap largely range-bound between roughly around $2.8 trillion and $3 trillion. You guys can see the bottom of this range came from the November drop that we had, and then prices primarily ranged underneath $3 trillion, tapping back into $2.8 trillion twice in December, but not breaking higher or lower. With liquidity light and conviction low, price action stalled. However, the first full trading week of the new year has the potential to shake markets out of that holiday-driven slumber. Between geopolitical developments and a heavy slate of macro data, conditions are in place for volatility to expand in either direction, which we will go over these directions here shortly. More recently, over the weekend, developments in Venezuela added fresh geopolitical variables to an already complex backdrop. The situation raised immediate concerns around oil supply, energy, volatility, and broader geopolitical spillovers. This is important. So far, crypto has not reacted meaningfully to these events, suggesting that markets are currently viewing the situation as localized or primarily oil specific. You guys can kind of see that in the headlines. Jamie Cox, managing partner at Harris Financial Group, said the overall market reaction will be muted and that we might get some market moving news tomorrow during the OPEC meeting, which takes place today. And shares in big oil on the drillers are likely to get a bid as speculation could build about the potential benefits of rebuilding the oil industry in Venezuela. And then another analyst mentioned that markets sometimes swing in a risk off mode on the expectations of conflict, but once the conflict starts, they rotate quickly back to risk on. Given how quickly this unfolded, the oil markets might be the only markets to respond. There have been plenty of forecasts of supply gluts in the oil market, and this will just add to that. So far, we're not seeing any major risk off implications in crypto as of time of recording this, but we will be attentive to this in the days ahead. So that assessment could change quickly if tensions do escalate or begin to impact energy prices more aggressively. Sustained oil volatility would have second order effects on inflation expectations. That's very important. Central bank policy, also important, and overall risk sentiment. If geopolitical tensions remain unresolved or intensify in 2026, they could continue to drive capital towards safe haven and weigh on risk more broadly. This is ideally what we will pay most attention to for headline risk in the days ahead. Beyond geopolitics, there are several policy-driven uncertainties sitting just below the surface. Remember, I've told you guys about the looming Supreme Court decision regarding the legality of Trump's tariffs and how they have the potential to inject uncertainty into the global trade and corporate planning operations. And so I feel like that's something that not a lot of people are paying attention to. One thing that we are paying attention to here in this community. And if I remember correctly, last year I shared an article that talked about how these Supreme Court decisions around Trump's tariffs are supposed to come into fruition and materialize before April of this year. So in the coming weeks ahead, I'm sure that we'll start to see headline attention towards this topic. If tariffs are ruled illegal, markets may need to reprice trade assumptions rapidly. So that, in my personal opinion, will be a worst case scenario for risk assets like crypto this year, is if we saw Trump's tariffs doomed illegal and the market had to completely reprice all the uncertainty that would stem from that and all the reordering and restructuring of new tariff implications and how all that could unfold. So just be mindful of that in the coming days ahead. At the same time, the upcoming transition in the Federal Reserve leadership introduces another layer of uncertainty. Now, this will be my first time as a market analyst, i.e., I only started incorporating fundamentals in my 9 year trading journey about 4 years ago, that we've seen a Fed chair transition. All right. So I've never personally experienced this and actually paid attention to it. So I don't really truly know how this is going to have or, cause market implications. But based off of history, historically speaking, Fed transitions can be periods of elevated volatility as markets attempt to infer the new Fed chair's reaction and how that function may differ. So, just based off of historical context, we know that a more dovish leaning Fed chair would likely support risk sentiment by increasing the perceived probability of rate cuts in 2026. While on the opposite side of the spectrum, if we were to get a more hawkish leaning Fed chair, that could reinforce the current cautious environment. That's what I'm going to go off of right now, and I will remain attentive to headlines in the coming days ahead and let you guys know about those headlines. All right, so just be mindful of that. And remember, that's set to take place in, I believe the transition's set to happen in May, if I'm not mistaken. At this current moment in time, markets remain stuck in ranges, waiting for clarity. A break of these ranges will matter. So, talking about a bullish break supported by a risk on backdrop. This could restore confidence and encourage risk taking, and that would be a break above that $3.3 trillion threshold that we had mentioned. An aggressive seller was able to break the last support here, setting price into the lows of around $2.7 trillion before we had this recent and most sustainable bounce. We'll go over that in just a second. Inversely, a bearish break with further market uncertainty driving demand for more safe haven assets would reinforce caution and could accelerate downside pressure. The direction of that break will likely be determined by incoming macro data. So if we cannot break higher, turn $3.3 trillion while that aggressive seller sits here in this down leg into support, could possibly see this become a bull trap. Same thing inversely, if we cannot break substantially with bullish momentum and hold the top of this range as support, we're likely to see buyers get trapped, price reverse, and get thrown back to the downside of this range, possibly even breaking below it into lower territories. We'll go over that in a second. Outside of the geopolitical headlines, labor market data is the primary focus this week. with employment data due on January 9th, pretty much all throughout the entirety of this week, right? We have ADP, we have unemployment claims, unemployment rates, NFP, so on and so forth. JOLTS job openings, all that stuff this week, okay? Overall, concerns about the labor market weakness were one of the key reasons that the Fed cut rates at each of its final three meetings in 2025. As policymakers balanced their dual mandates of full employment and price stability, and you can see that here, it says those who favored lowering the target range for the federal funds rate generally judged that such a decision was appropriate because of downside risk to employment. Lower rates were a major driver of the mid 2025 rally in crypto. However, uncertainty around how far and how fast the Fed can continue easing in 2026 has been a core driver of the recent risk off tone. At the December meeting, Fed officials were divided, but broadly aligned on one point, and that is further rate cuts require clear evidence of cooling inflation alongside moderation or weakening in the labor market. Inflation still remains well above the Fed's 2% target, keeping policymakers cautious for now. With the policy rate currently in the 3.5 to 3.75% range, markets see, as of time of recording, according to the CME Fed Watch tool, markets are seeing a little chance of a January cut, but roughly even odds of a cut in March, currently hovering at around 50%. As a result, shifts in January and March rate cut probabilities over the coming weeks will be a key sentiment driver. How many times in 2025, guys and gals, were we paying attention to this rate cut probability? That was a key denominating factor in our accurate analysis in 2025. So we're going to continue to pay attention to this in 2026. We know that a higher probability for rate cuts will likely help support risk assets, and a pushback on rate cuts in March below the 50% chance will likely keep risk assets like crypto range bound or even possibly take them lower. One of the most important nuances worth emphasizing is that not all weak labor data is bullish for risk assets. I cannot stress this enough. So let's take a look back in terms of historical context. While softer employment does support the case for rate cuts, an overly weak labor market can spark recessionary fears and trigger short-term risk-off reactions. For anybody that was in this community back in 2024 in August, we saw this dynamic clearly. When a major downside surprise in non-farm payroll caused a sharp sell-off in risk assets and recession concerns surged. So here you can see that screenshot. This was the August 2nd candle where we had that Friday of a bad NFP report. The labor market report came out super horrible, sparked fears of a recession. The market shed almost over $700 billion, dropping into 1.68 trillion. We had a slight bounce, full-blown market correction from that bounce as we headed into September. And it wasn't until the Fed actually cut rates, I believe it was the week of the 15th to the 19th of September, where we actually started to see a sustainable market recovery and the market rally into November and December. All right, so just be mindful of that, and you can see that in the headlines. This was a couple days after August 5th, 2024, an unexpected weak U.S. employment report featuring a post-pandemic high in jobless rate rekindled worries of a recession. Then here, Fed rate cuts, you can see September 18th, 2024, Fed cuts rates by half a point, and then we started to see a full-blown market recovery. So just be mindful of these historical scenarios that teach us indefinitely about fundamentals and how they actually make the market move. So that same risk exists now. A controlled cooling of the labor market would be ideal. I'll highlight that in bold. Again, a controlled cooling of the labor market would be ideal. A sharp deterioration could still pressure crypto in the short term, even if it increases the probability of future easing if recession fears spark safe haven demand. What the data is currently expected to show. Employment for December is expected to rise modestly, with payroll growth slowing from November levels and unemployment remaining elevated near multi-year highs. Wage growth is still expected to remain firm, suggesting that wage-driven inflation pressures have not fully dissipated. In addition to jobs data, markets will also be watching manufacturing and services activity, which we get, I believe, tomorrow, job openings, consumer sentiment, and consumer sentiment will be on Friday, and a broad set of delayed economic releases as reporting schedules normalize. I believe we still have some reports from November that we're going to get this week, if I'm not mistaken. Any data tied to underlying economic activity or inflation, long story short, will be what is scrutinized. Fed speakers also need to be monitored throughout the week. particularly if they provide clarity on how officials are interpreting recent data and the outlook for the policy in 2026. So there's Fed speakers scattered throughout the week. We'll take a look at that here in a second when we go over the calendar. So just touching on these risk on versus risk off scenarios. For a risk on scenario, or what we like to call in this community a rainbow scenario, and then take a look at 2025. How many times did we get that rainbow scenario? Like maybe 2 or 3 times in all of 2025, right? So this is highly unlikely, probable, but would most likely guarantee a recovery in risk assets if we saw all of these things across the board materialize, or one or two of these things materialize with enough to support change sentiment from the current sentiment now. And that would be a constructive backdrop for crypto, requiring cool labor market data that does not spark fears of a recession, signs of a moderating economic activity without a collapse, dovish or balanced messaging from the Fed officials supporting future rate cuts, rising market implied probabilities for rate cuts in January or in March, de-escalations or stabilization in geopolitical headlines. So any headlines of ceasefires or peaceful agreements or negotiations between these major jurisdictions that have recently held conflict. No yen carry trade unwinds or mentions of yen interventions from Japanese finance ministers. Positive regulatory developments, of course, could always stimulate growth and optimism in the crypto market. And last but not least, Trump's tariffs remaining intact and no uncertainty from Congress votes on Trump's tariffs. In this scenario, the dollar would likely soften, risk appetite would likely improve, and crypto could hold above the $3 trillion threshold while attempting a more meaningful recovery. And the risk off scenario this week, again, a rainbow scenario for more sell pressure in crypto. Mind you, again, we could see a week where it's mixed, where we see some of these things and some of these things unfold and just keep us in a range bound formation. But in a risk off scenario, if we were to see labor or economic data come in stronger than expected, pushing back further on rate cut expectations, any Fed speakers reinforcing a hawkish or restrictive stance, rate cut probabilities, i.e., the CME Fed Watch tool, falling meaningfully. So right now, the market's pricing in a 50% probability of a rate cut in March, and I think it's like a 10% chance of a rate cut in January. So if we saw those rate cut probabilities fall to 0% chance in January and something below 50% in March, that would definitely likely suppress a meaningful recovery in crypto. If we saw any geopolitical tensions escalate or any tariff uncertainty intensify, and if we saw any yen carry trade unwinds or any Japanese finance ministers mention a possible intervention with the currency, strengthening the yen. Under these conditions, the dollar or safe haven assets would likely strengthen, risk appetite would likely fade, and crypto would likely continue to struggle and sustain the current support at levels in which we're trading at today. Finally, it is very important to remain aware that I cannot reciprocate this enough. Why? Because we always see, when the data comes out, we see Watcher Guru and all these whale watchers on Twitter and stuff jump all over the news. And instead, we need to make sure we read the fine print. Okay. So it is very important to remain aware that extremely weak labor data may still pressure crypto in the short term. While it increases the likelihood of rate cuts, yes, which is what all these news channels will like ooze their mouths over. They'll be like, oh, freaking labor data was horrible. Rate cuts are back on the table. We need to remember that an extremely weak labor market can raise concerns about economic contraction, and markets often react defensively first before responding positively once policy support becomes more certain. All right, so just be mindful of that. Another thing that I'm being mindful of is any positive regulatory developments in the US that favor institutional adoption in crypto that could allow for the crypto market to decouple. I've heard some economists also mention that any negative regulation or updates or pushback on timelines could dampen optimistic sentiment as well. So just be mindful of that. As positive as regulations can be, they can also be something that throws a negative curveball out of nowhere. Right now, crypto is currently holding above the $3 trillion level at time of writing, but for that support to turn into a durable base, the broader macro backdrop needs to shift back towards risk on. Controlled economic cooling, Clear visibility into the Fed easing and reduction in geopolitical uncertainty would help. Absent those conditions, any risk-off shock could open the door to further downside as we move deeper into 2026. The coming week ahead has the potential to set the tone. All right. So I will say this one last thing is that I don't think that this week is going to set the tone for this massive breakout. I have a firm belief that it's going to be labor data and the next week's inflation data that we're going to start to get that's going to really start to materialize the direction of the markets in which we're going to be headed into in 2026. But nonetheless, this week will play a very important and impactful role. All right. So with that in mind, let's first take a look at the total cryptocurrency market cap. Right now, we are on the daily time frame. Just some interesting structural points that I'm paying very close attention to in previous Zoom calls before the new year rolled over. The last down leg that we were paying attention to was this A to B move from November from roughly around 3.6 trillion at its high all the way down into 2.7 trillion at its low. And we were talking about how ideally, in order to see the markets make a sustainable recovery, this was the last bearish leg in which we are operating in and are currently, in my opinion, still operating in. We need to see buyers break above the 3.3 to 3.6 trillion dollar range, turn it into support. You guys can see here there was a previously held support that existed. Here, buyers made an attempt to defend here. They got trapped at highs. Sellers became aggressive enough in this leg to break this support. And so we know that in this leg, there are likely, if price pushes back up into these highs, going to be aggressive sellers that make an attempt to passively defend at these levels. And so ideally, we would like to see buyers overcome and overpower the sellers that exist in this leg before getting overly optimistic of a substantiating recovery, right? Hopefully that's making sense. So something like this, a break up into the area where aggressive sellers previously existed. I say the first aggressive seller that was able to break and push price down to this level comes in at about 3.5 to 3.6 trillion. Below that, and these bearish candlesticks, 3.3. So we'd like to see buyers break above the triple moving average, turn the 3.3 level into some type of support, or create a substantiating pullback and discount to continue higher, and then start to make our way back up into this higher $3.6 trillion range, turning that as well into a support and seeing buyers become aggressive before getting overly optimistic, right? Now, in order to get there, we're clearly going to need to see the risk on backdrop. So this is just one possible scenario if we were to see a risk on environment this week and next week heading into the remainder of 2026. Something else is if we were to see price break down back into the low of this range, where right now, something else I'm being mindful of is the structure that existed in this leg. So here you can see a low, lower high, lower low, lower high, lower low formation. And what I am being cognizant of is the possibility of this turning into a delta held pattern to the downside or a buy delta held pattern, where recently we have broken the most recent high here. This could now have possibly been the 3, and we could start to see buyers make an attempt to continue to push price back to the upside. Where this was the liquidation of the low or the 1, this move higher was the 2 that broke the previous resistance. This was the retest of the buy base or the support as the 3, and price now continues to trail higher, right? So that is also something that I'm being mindful of in a scenario for a bullish environment. So give me 3 things this week, ideally, that we would like to see after going over this report in order to see any type of sustainable bullish recovery above where we're currently trading at now. Somebody give me one thing that we would like to see this week.
I would say maybe some positive geopolitical headline.
Yeah, good job, Javon, right? Some positive geopolitical sentiment like ceasefire talks, these, these companies, I was going to call them, these organizations, these jurisdictions high-fiving each other, having peaceful agreements and negotiations that come to a conclusion that some of these ongoing geopolitical tensions are going to cease to exist. Just anything that is positive around the ongoing conflicts, and whether it's China, Taiwan, the Middle East, Venezuela, Russia, Ukraine, it doesn't matter. Something positive along those lines that shows ceasefires or peaceful negotiations on the horizon, right? So good job. That would definitely bring back some optimism in risk assets and could possibly lead to some profit taking in safe haven. So that's one. Somebody give me another one.
Weaker labor data.
Court.
Okay, good job, right? I'd say I wouldn't just say weaker labor data, but we definitely could see if we saw cooling in the labor data that doesn't spark fears of a recession. That's very important. Cooling in the labor data that does not spark fears of a recession, it definitely could bring the risk on backdrop. Why? Because the markets will likely start to do what?
Price in.
Yeah, price in rate cuts, right? They'll probably start to price in a higher probability of a rate cut possibility in January, and then also a higher probability of a rate cut in March, right? So good job, whoever said that. I didn't see the name pop up, but pat yourself on the back. All right, so that's two. Geopolitical tensions easing, cooling labor market data that does not spark fears of recession that brings back rate cut probabilities to the table. Somebody give me one more.
What about
That by
the chair?
speakers.
I think the election of the chairman.
Okay, I heard a whole bunch of things. I'll go out and say the thing I paid attention to the most was the court case around Trump's tariffs, right? So good job. I don't think that we're going to get a vote on Trump's tariffs this week, but still something to be mindful of that could bring back risk sentiment or risk on sentiment is if the tariffs are not deemed illegal and a bunch of uncertainty does not stem from the vote from Trump's tariffs in Congress, right? So we'll hold it off to those three. There's a bunch of other things that we covered, but just make sure that you guys are aware of what would need to ideally happen in order for us to become hopeful of a full-blown market recovery. It's not just going to happen, right, guys? It's not just going to materialize and just come out of nowhere. There's going to need to be some type of catalyst for these markets to move, all right? So we're looking at the primaries. It could be something secondary that we're not aware of, but these are the definite primaries that we are going to be paying attention to. All right. Okay. Outside of that, taking a look at the downside, because that's something also that we need to be mindful of. So right now, I'm looking at this. Obviously, of course, there's probably some type of aggressive seller that exists here in this area as well, because you can see here, there was a support here or a buyer that made an attempt to absorb sellers. Sellers trapped buyers, became aggressive here in this area to push price lower. Then here again, you see another buyer trying to make an attempt to absorb sellers. They fail, get trapped, and price continues. So I would go outright and say that if this is a sell base, this is probably the top of this current range, somewhere here in this area at around 3.1 to 3.2 trillion dollars. So right now, if we cannot have a sustainable break above this range, turn it into support and trail higher, we need to be mindful of a possible reversal. Okay. So that would be scenario number one, I'd say. For right now, the bearish outlook in crypto is if we cannot have a sustainable break above the top of this bearish range, turn it into support and start to make our way higher with buyer aggression, we need to be mindful of a possible reversal. If that scenario does not unfold, a full-blown reversal from where we're currently sitting. And then the last scenario that I would be mindful of is maybe they do start to make people hopeful that markets are going to recover, but then we come up into this higher area of interest where we know those aggressive sellers were here with enough momentum to trap buyers, become aggressive, breaking the support that exists here. And we know that once buyers push price up into these levels, there's a possibility that these sellers could become passive, trap buyers at highs, and then become aggressive enough to push price back to the downside. Okay. So these are the three bearish scenarios that I'd be paying attention to in the days ahead as possible caution for lower levels in the total cryptocurrency market cap. Now, to get there, again, it's not just going to happen overnight. Somebody give me one out of three things that we need to be mindful of that could create scenarios like this to unfold in the days ahead.
Geopolitical tensions.
Okay. Any geopolitical tensions or escalations, and it doesn't matter if they stem from the Middle East, China, Taiwan, Russia, Ukraine. Anything that drives more demand for safe haven and sparks continued masking uncertainty and amongst these geopolitical nations. Okay. So great job, Patrick. That was one. Somebody give me another one.
Hawkish Feds.
Hawkish Fed speakers, right? If we all week just see hawkish Fed speakers push back on the prospects of rate cuts, and they don't, emphasize immediate easing or prospects for immediate easing, and the markets price out rate cuts, so we see those rate cut probabilities dwindle. That's definitely going to put some sell pressure or at least consolidation in risk assets, where maybe we don't see any of these scenarios, but we just see a range bound price action like we did in December, right? Price coming up into the high, ranging back down into the low, and then having another sustainable bounce back up into the high, and price just ranges, right? All right, so that's two. Geopolitical escalations and tensions, hawkish Fed speakers. Somebody give me one more.
Negative tariff talks.
Okay, negative tariff talks, right? Any uncertainty that stems from Trump's tariffs deemed illegal because the market would have to reprice or reorganize itself and restructure how the new tariff implications could affect not only business endeavors, but also inflation, so on and so forth, right? Probably not going to be a good thing for risk assets. The last thing that I will throw out there that I'm sure some of you guys wanted to say is massive deterioration in the labor market strength, which I personally don't think we're going to get, but still, nonetheless, something to be mindful of. And then on the flip side of that, if we were to see a huge deterioration in labor market figures sparking fears of a recession, we also need to understand that any overly optimistic labor data or overly strengthening labor market data that pushes back on rate cuts and strengthens the dollar could also add to the sell pressure and risk sentiment, particularly crypto. All right. So those are the scenarios that we'll be mindful of in terms of the total cryptocurrency market cap. Canton coin first. All right. So I had highlighted for you guys the other day when price was trading at this high here, structured at around the institutional dark pool at the 15,898. And I had mentioned the possibility of a sell delta held pattern playing out, which as of right now does look like that is what's about to materialize. The moving averages on the hourly have remained supportive, or excuse me, I say supportive, but as above, so below, have remained for the resistance for this crossover here. What I was looking at is this as the one, or the sweep of the high. The last support that broke or led to this move to the upside at the 15,898 had been violated by this move to the downside. I was taking my Fibonacci in the example that I gave to you guys, and I was taking it from the high, excuse me, down to the low. And what I did when I gave you guys that screenshot was I highlighted the 70 to 62% retracement area. However, you can see that the 50% retracement area as well has been respected multiple times. Deleting that Fibonacci, you can see that this would be the 3 or the pullback area, leading to a sell delta held pattern, i.e. lower prices. This is a distribution schematic if you're looking at Wycovian theory or whatever the case people like to call it nowadays, where in a nutshell, buyers are making an attempt to push above a sell dark pool, but passive sellers that were previously aggressive here in this area with enough momentum to break previous support are trapping buyers at these highs, disallowing them to move higher with buy momentum, and instead aggressively pushing price back to the downside after passively trapping them. And you can see that we're constantly breaking support. So here, even in this area, albeit we have not engulfed the lowest portion of this wick yet. Oh shit. Come on now, drawing tools. We have not engulfed the lowest portion of this wick yet in terms of candlestick bodies. We did break this recent support here with this move, which does show us that there are sellers enough in this area with aggression to break the buyers that existed here. And so price came back up into this area again. Excuse me. And on the lower time frames, we're just constantly seeing this sell delta held pattern. So here is the last support that pushed up into this high. We could even classify this as the last support, maybe even, but this support will work. So here's the move higher. Excuse me. Excuse me. A high was violated. Then a structural point or a support was broken. We had a small pullback. You could probably measure this out. This will probably be a 50% retracement. Yep, the 50% retracement held weight, and then the downtrend continued. All right, so we're constantly seeing sell delta helds right now at the dark pool. And so right now, I'm just being cognizant and mindful that if this sell pressure continues, let me meet you guys. If the sell pressure continues, I had mentioned to you guys that my first area of interest for possible buying will come back in at around the 13480 institutional dark pool, or the next sell dark pool to the downside. However, personally, because of all the things that are stemming on the fundamental horizon, if we did push down into the 13480, I would not be surprised if we instead saw a deeper correction down into the 09453. Reason being is because on the higher time frame, I don't know who keeps coming unmuted, but make sure you guys are staying muted. Hold on. All right. On the higher time frame, we have not yet seen a meaningful correction of this previous upside move. And personally, I pay very close attention to the triple moving average and how it tends to act as a support. And the 50 EMA is a very important triple moving average or portion of the triple moving average. And you can see right here a healthy correction of Canton to correct this previous A to B move on the daily would be a pullback down into the triple moving average or the 50 EMA, and that would put us at around the 10 cent to the 0.09453 psychological level, possibly holding that as a support, buyers making an attempt to defend, become aggressive, and then possibly pushing us into higher prices. And if we look out on the higher time frame, a lot of people would start to call Canton a scam, this, and that. They would say, oh my gosh, everybody that was boasting it at 15 cents is a fraud, blah, blah, all the bullcrap that would come with it. We know that in this community, taking a fib from the low to the high, if we were to get that, that would just be a 79% correction of the previous bullish move, and it would be a great buying opportunity, in my opinion. All right. So if we do pull back down to the 13480, which as of right now, it looks like that might be the case. I'll be very mindful. I'll pay attention to any sell or buy delta held patterns at that level. And if we can break that, turn it into resistance and continue to create sell delta helds at that level, I will wait before implementing massive amounts of capital at 13480 to see if we can get a deeper retracement back down into the buy delta at the 09453. I will obviously, of course, remain attentive to any of these lower targets if the sentiment in crypto worsens, i.e. any of those risk off backdrop scenarios unfold. We still have the dark pool down at the 026 and the 0001, where I will be buying a substantiating amount of Canton if we were to come down into those lower cent levels. Like I'm talking about, I'll probably offload my bank account type shit into Canton if we can get these lower levels. So yeah, I couldn't imagine. If we were to come down to the 001, oh man, I'm walking away with at least 2 or 3 million Canton coins for sure. Right. So, anyways, I'm just letting you guys know that those levels are on my radar, possible. But considering that right now the triple moving average is holding a support and it's also aligning with the buy dark pool at the 09453, and that would come into fruition with the correction of this previous bullish move, we're definitely going to need to see a complete risk off backdrop in order to get us down there. All right. Before I let D'Angelo speak to the upside, if any of these levels hold as support, i.e. the 1348 does not break, turn into resistance, and let us trail lower, we turn this into a support. Buyers defend their previous aggression here, where you can see sellers made an attempt. Buyers likely trapped them at lows. Buyers then became aggressive enough to break above the 1348. It does look like we're on the verge of retesting that. So if sellers cannot overpower buyers in this area, it turns into support. I am expecting a possible move higher. Up into the 19214. Anything above the 19214, we have the next sell dark pool at the 22582 on our radar. All right. So real quick breakdown of Canton. D'Angelo, go ahead, brother.
Hey bro, why do you use the triple moving average crossover versus the single moving average that you used before as an added confluence? Is it more so the case of additional signal for you when it comes to changes of structure or
Well, so just the triple moving average, right? And each app moving average has a different metric. So like my 8 EMA tracks the average price action for 8 days. The middle EMA trails the average price action for 18 days. And then my bottom EMA trails the average price action for 50 days. And so one thing that I've noticed, and you guys can go back and back test this by utilizing the triple moving average, is that any time that price is overly extended away from these triple moving averages, one thing, usually they come back to these triple moving averages and they act as support when price comes into them. So I like to use them as areas of interest. So if I notice that price is about to pull back, these become my areas of interest for where price could possibly pull back into, right? That's one. The second thing is it gives me a clear indication of the trend, right? So if I'm on the daily time frame, right? Price is above the triple moving average on the daily. I go down to the 12 hour. Price is above the triple moving average on the 12 hour. I go down to the 4 hour. Price is above the triple moving average on the 4 hour, so on and so forth. Then I know that trend for the day, I should not be making an attempt to sell because right now the triple moving average is acting as a support in price action. So until that's violated to the downside, these TMAs act as a resistance on the higher time frames. It allows me to trade with the current sentiment instead of getting miscombobulated in the fractal and micro price action and making the wrong informed decision on the wrong side of the market based off of emotion instead of data, if that makes sense, D'Angelo.
no, it does. Thank you, bro.
So yeah. And then something else too that I like to do. So like you can see here, we went from the daily, kind of just highlighting the triple moving averages. Then you go down to the 12 hour, right? So now you can see that from the daily, highlighting the 8 EMA, watch how it correlates down to the 12 hour. So you can see now the 12 hour, this box that we drew on the daily correlates now with the 18 EMA. So this area of interest becomes even more apparent right here. Whereas vice versa, this was the daily 50 EMA, but you can see now on the 12-hour EMA, this correlates a little bit more with the 18 EMA on the daily. So I'd go ahead and I would delete this to narrow it down to two areas of interest. We can drop down one more time to maybe the 4-hour, right? And you can see now the 4-hour area of interest, the 50 EMA comes from the daily 8 EMA, the 12, 18 EMA, and now the 4-hour 50 EMA correlates with this same area of interest that we have not moved from the daily. So if we wanted to dumb it down even more, we could delete that. And now I'd look at this from the daily down to the 4-hour using the EMAs as a very key interest or area of interest, where if this does not act as a support, buyers start to reaccumulate orders and price action moves higher. I would almost go outright and say that if this turns into a resistance, price becomes aggressive enough to break beneath this EMA on the 4-hour, then we know that that's going to translate to a break in the EMA on the 12-hour and a break in the 8 EMA on the daily, and it starts to act as a resistance. Well, we know from the 4-hour up to the daily, that's going to likely result in a deeper correction. So hopefully that kind of broke down for you a little bit more in detail why I use these EMAs. Right? Okay. Canton out of the way. XRP. In a previous upload and a breakdown with you guys using order flow, I believe it was the last trading day of 2025, we broke down using the order flow XRP's price action and we highlighted the $2.11 area of interest. We had mentioned that there was a aggressive seller that existed here on the order flow. You can see buyers made an attempt to push higher above those aggressive sellers. Sellers became passive, trapped them, retested that aggressive seller that was at that $2.11 range, continued with aggression, and with this overall downtrend and momentum on XRP. XRP has now come back up into that $2.11 range. I know I don't have the order flow on, but you guys can now see in real time how accurate that was. I even dropped that video where we were on that call together in the XRP chat here. This was that call that we had a couple days ago where we had highlighted that yellow area of interest. And so now, same thing. You can kind of see how right now we're in limbo. There's an institutional dark pool that comes in at $2.27. However, buyers have currently and recently failed to break above aggressively that $2.11 seller that exists over here in this area. And we are also overly extended from the EMAs, right? So if sentiment worsens this week, meaning we do not see a continued supportive risk on backdrop, I'm expecting a full-blown correction of this recent move on XRP. Taking a fib from the low to the high, a 70% retracement, excuse me, would put us back down into the $1.90 range. However, a full-blown retest of the 50 EMA, excuse me, on the 4-hour and a 62% retracement will put us back down in the low $2 to $1.98 range before we possibly hold and find support on XRP to possibly take the move higher, where we could see buyers rekindle orders at these levels, start to trap sellers, become aggressive enough to make another attempt to push higher. Bullish scenario number 2 would be if my correction thesis is incorrect. Price consolidates at $2.11. Sentiment flips risk on. We break 211, turn it into support. The next area of interest and hurdle to overcome on XRP before getting overly excited is $2.27. If we can break 227, the next hurdle to overcome is 263. But I'm sure that we will have another Zoom call this week before we reach and surpass 227, unless it just shocks the world and happens in one candlestick like this over the next 24 to 48 hours. 263, however, is the next institutional dark pool. To the downside, if we cannot see a sustainable break above 211, we end up correcting down into 190, and buyers cannot trap sellers at this level and become aggressive enough to push back to the upside. I'm looking for a possible sell delta held pattern, i.e. a break in market structure, a retest of this to the downside, turning it into resistance, and that could open the door for lower prices. $1.69 is our next institutional dark pool below $1.90. I'll leave that there, keeping in mind that the next dark pool beneath that is $1.39, and also keeping in mind that the lowest level institutional deltas that we have come in at 77 cents. But we are a long stretch away from that right now, so I won't put that onto anybody's radar. Just keeping it in the back of your heads. All right. So for now, to the downside, our most immediate targets or revisitation levels are $1.90. We need to see how price reacts around that if we do get a pullback. If buyers cannot trap sellers, become aggressive enough to push price back to the upside, then we will likely see price continue to act as a resistance at $1.90, and we likely will see lower levels. All right. You guys now have both upside targets and hurdles that we need to be mindful of on XRP and Canton. Outside of that, that is all that I have for you guys for today's breakdown. Taking a look real fast at the calendar. Tomorrow kicks the week off with the ISM manufacturing PMI. What you guys need to be attentive of as day traders in this market, okay? I cannot stress enough, is the time in which these fundamentals come out, okay? So even if you're not a fundamental analyst and you don't incorporate fundamentals in your price action, just pay attention to the time that these come out. Remember that when the news comes out, if it's not already priced in, usually there's some type of manipulative price action when the news comes out, and then 15 to 30 minutes after the news comes out, when the market settles, is when the news or when the market move happens. Okay? Just be mindful of that. Tuesday, relatively light. All we have is the final services PMI and some FOMC speakers. Wednesday, the data heavy week picks back up with the ADP non-farm employment change, ISM services PMI, and the JOLTS job openings, coupled with the factory orders and a few scattered Fed speakers. Thursday, we have challenger job cuts and unemployment claims to be paying attention to. And then on Friday, obviously, of course, we have non-farm employment change, unemployment rates, which right now are expected to slightly decrease from previous readings at 4.6 down to 4.5. And then also at 9 a.m., we have consumer sentiment and inflation expectations, which will play a key role. And then ending Friday, we also have some scattered Fed speakers. All right. So huge data week ahead for the first full week of January. This week is going to be jam-packed, especially for any new members that haven't seen the pace at which we hold here at CYPRX. So just be mindful, you guys and gals. Be cognizant. Be aware. Any trades that I have this week, I'm sure myself, Aqua, and any other willing participant will be glad and helpful to break those down for you guys this week. I will be trading. Outside of that, though, I'll leave the floor open for any questions, commentary, or just speculation if you guys want to throw it on the table. If not, then blessings to you guys.